So, this is going to be about how I go about my day. Every single day, I wake up and hop on the charts and exactly what I'm looking for. So, what I want to do first is identify higher time frame institutional order flow because I want to be aligned with what the higher time frame is doing. And if we take a look, we're going up, right? So, I want to be aligned with longs. And as we see, we have a sweep of this low. So now I'm like, okay. Looks like with this displacement higher, we want to go target these highs throughout here. But I'm not targeting those highs on the lower time frame, okay? So I want to be aligned with the higher time frame institutional order flow, but since I'm trading the 5 and 15 minute, I need to be targeting the highs that are probable for those time frames. So what I'm looking for on the hourly is, are we coming into a bullish PD array, this fair value gap? I use the hourly time frame to go off my daily bias because time frame alignments, the hourly complements the daily. So where the daily candle wants to expand, I want to catch the daily expansion. That is complemented by the hourly time frame, and then my entries go to the 5 minute. Now if I'm trading the 15 minute, I can also take entries there, but the 5 minute entries, 1 hour PD arrays, daily expansions. So I'm looking for hourly PD arrays. Notice we have all these lows throughout here. So we're sweeping sell side liquidity. Also a nice fair value gap here. So now I want to see buy side. We have equal highs. So now that we have equal highs, we're in a higher time frame fair value gap and we have these relative equal lows swept. I'm like, okay, hourly bias is bullish. So I go to the 15 minute. I turn these boxes on. Now what I'm looking for on these boxes is seek and destroy. I want to see what we're doing on London session. And in the bonus, I also give you a reason on why I use these boxes. But since London took the low and the high of Asia, we can expect New York, since it just swept London's low, to come the entire way back up to sweep the high because we are in seek and destroy conditions. So now we're getting this dump below London. It is aligning with the seek and destroy profile, and it's aligning with my hourly bias, which is bullish. So now my 15-minute bias is bullish. My hourly bias is bullish. I like to go to the 5-minute for my entries. So I notice that we're pairing orders under this low. So now we have a low taken. So now I want to see where we go from here. Look, right there we actually form another sweep of liquidity. So this is called a 3 drives pattern. Whenever we have one drive lower, a come up, a drive lower on liquidity again, and then we come up and then sweep that one more time. So this is engineering liquidity. So now everything is in alignment for us to go run higher. We have this 3 drives pattern as well. I taught you that in a earlier module. Now we have our displacement higher. There becomes your entry. Here's your entry to target those equal highs. And then boom. Now I actually went over this example before because I just go randomly in my chart and find examples. But this is exactly what I do from day to day. I look at the hourly time frame, but this is what I do from day to day to find the daily expansion, right? I want to catch the daily expansion. This candle right here, I want to catch somewhere in this wick right here, the move for us to push higher. I want to catch this daily expansion. So I start on the hourly chart, time frame alignments, daily to 1 hour, 1 hour to 5-minute entries. So the hourly bias is going to give us the daily expansion. The 1 hour PD arrays are going to give us 5-minute entries. This is what I do day to day. It's that simple, my friends. If you have any questions, please ask me in the Discord.